After running multiple businesses over the past 15 years and working with thousands of clients as a chartered accountant, I've learned that there are 7 critical habits that business owners need to be able to run a highly effective business. And I'm not talking about the mindset habits, I'm talking about the numbers, growing your business and minimizing tax. This video is a recording of a coaching session I had with my clients where I share real case studies and real numbers from businesses I've worked on. And because these 7 habits are so important for any business owner, whether you've been in business for decades or just starting out, I've decided to share this knowledge with my YouTube audience too. Let's get into it. So let's start with the first tip that I have for all clients. And you hear this everywhere when it comes to accountants. If you ask an accountant a question on what you should know, like as a business owner, and they always say like all business owners need to know their numbers. So all business owners need to know their numbers. They need to understand it. And I hate the tip where people say outsource everything, outsource all the boring stuff. I think that tip is very, very bad and shouldn't be told to everyone. I think that you could outsource your numbers and outsource like your help with finance and accounting, but you should at least know how to come up with your numbers in the first place. So in Box, we always train our clients how to actually set up Zero, how to use Zero, even though they won't be doing the bookkeeping moving forward. And the reason why is because if you don't know your numbers and you don't know how to actually come up with your numbers or even read your numbers, then what's the whole point of even outsourcing your bookkeeping work? Your bookkeeping work could be wrong. Your numbers could be wrong. It could be prepared by an accountant or a bookkeeper that has got wrong information. And you can't even tell if it's right or wrong. And you're basing your decisions on your business on that. And that causes significant issues for you. So that's why we always tell our clients that you need to understand the basics of taxes, accounting, and finance. And if you don't know, you should ask. And that's why, like, where Box is, we provide services where you can just call us anytime. And so that's why I think it's very important for you guys to actually understand the basics of taxes and accounting. And taxes that actually impact the business. So there are a lot of taxes that impact the business. There's GST, there's income tax, there's FBT, then there's payroll tax, and then all the other different types of lodgements for state tax, land tax, and all that stuff like that. So if you don't understand any of them, then I think it's very important for you to ask that question. But the whole point of that is for understanding that is then you can make better decisions. So I have this set of financials that, well, not set of financials, but a set of profit and loss for a client of ours. All right. This is 2018, 2019. This business is a service-based business. And I've deleted changed some of the numbers in this spreadsheet. So basically, this business made about $210,000, whereas in the next year, made about $300,000. So these numbers here are very important. And you always want to know how well you're growing compared to last year. And you also want to know these numbers. The problem with a lot of business owners when they first start is they only care about what's money in the bank. They don't care about anything else. And the biggest problem about caring what's money in the bank is that they actually don't know how they're going in terms of the business. Like what's the natural good habits they have and what's the natural good health situations, like reports or numbers that's showing them that the business is actually doing well. So let's just have a quick look at this business, and then let me tell you guys a story by reading this number at this business. So for example, $210,000, it's gone up to about 334K, and it's got a 59% growth. It's back in 2018 and 19. And if I ask the question to a client, when did you start the business? They started about 2016, 17, that financial year. So it's only been 1 year and they've been able to grow the business to 210,000. And then from then onwards, they had close to 60% growth, which is actually quite good for a business owner. They also had a bit of other costs. They didn't have any contractors or wages for cost of sales. So because you're a service-based business, your direct costs of wages and contractors can result to increasing your income. And that's what you call cost of sales. Anything that you spend to increase your increase your income is directly related to cost of sales. That's why we have a cost of sales section here for this business, but not all businesses will have cost of sales. So if you're a software business, you don't really, if you spend more wages or more people that do like admin or building a software, it doesn't directly relate to increasing your income. So therefore, your wages isn't technically your cost of sales. For manufacturing businesses or wholesale businesses, yeah, buying more stock ends up being your cost of sales because that will directly relate to your income. Okay, so that's the first part of the profit and loss that you should always look at. You should look at your income. The most important thing that you should be looking at is the different types of income. And I've seen a lot of clients, they have only just one line for their income, which is like sales. But for you, or we've got marketing businesses, we've got mortgage brokering businesses, we've got gym businesses as well. For you guys, you might have different types of services, and you might want to track the different types of services. So as you look at this client here, um, I think I might have accidentally showed who this client could be. But if you guys see, there's tax advice income, and I didn't delete that for you guys. But that's a clear hint that this business is actually my business back in 2018-19. So back in 2018-19, the business was making most of the income through service fees, and it's grown. Like when we first started, we were making about 150K, and then we went up to 257,000. Why didn't I show 2017? The reason why 2017 wasn't shown was because I started like probably halfway in the year, financial year, as well as I kind of went on like a lot of holidays. I kind of took a big break, so it wasn't really a good year to show. So that's why I excluded that out. But yeah, that's kind of like a picture of how my business went. I had different types of services and different types of ways to make money as well. But the main business income source that I was making was through my, service fees. So I just knew that I should double down on this business, this section here. Okay, just so you know, this service fee was actually split up in multiple different incomes as well. So income streams. I had monthly recurring revenue. I had one-off payments as well, one-off income. And I also had like all these other like special types of project income as well in this service fee. So the reason why I split that up was because I actually wanted to know what my recurring income was per month, so I knew how much to spend, and then also what my one-off payments are, one-off one-off service incomes. And the reason why I want to know the one-off service income is because they help me next year to determine how much one-off service incomes I'm going to get for the next year based on like my turnover that I think I was going to make. So why do I so these are really important, and this is probably something that you should really focus on for when you're looking at your numbers. You should have the time to split this up. So one of the questions might be like, should I get the accountant to do it, or should I do it myself? I have to admit, most of this should be only looked at by the business owner. The accountant doesn't really look at your income. Like they look at your gross income and your total income to tell you how much tax you're going to pay. But they don't really care about where you got your income from, and like the source and like how frequent you're going to receive that money. It's all the business owner that really wants to know that information, so they know where to focus their resources or their marketing or their energy in to make more income from that source. So it's really important for the business owner to look at this. The last thing that you also want to look at, and I'll skim through this real quickly, is all your expenses. So as you can see, as an accountant, I do have quite a fair bit of expenses, and my end result of it is like I have a net profit here. But I did in my first year have wages, and that wages was paid to myself. And you can see that I was only paying myself about $50,000 in the first financial year. And then after that, I paid myself about $80,000. Then I took a dividend of about 68. Oh, sorry, I took net profit of about 68 and $129,000 in profit in the second year. You would also see that there was big expenses here. There were also, I paid a bit of superannuation to myself. That were big expenses. And then I had some contractors that were doing some work for me, like contractors to help me with tax returns and possibly some sort of special projects that I was working on to help my clients out. And obviously I had a motor vehicle because I had to travel around for work purposes For some weird reason, my registration fees were quite expensive. I can't. Maybe it was insurance. I paid a lot of my insurances up to date, and this probably got consolidated into insurances. So I think that one there was a bit wrong. Yes. So this is kind of like how my business has worked. So over time, I realized that I needed to track this on a regular basis and I need to compare. So what I normally did for say 2019, 2020, sorry. I looked at 2019 and then I estimated how much growth I was going to make. So I said to myself, I had a goal that I wanted to like double my income. So if I doubled my income, this is what I was going to be aiming for. And this is what I wanted to aim for on a monthly basis. I wanted to aim for 55,000 in terms of monthly income. Then I looked at my average customers. How much does my average customer make me? So average customer at that time was making me $3,000. So therefore I just needed to, find 18 new clients on a monthly basis or 18 new clients on a monthly basis for my business and do that much work and I'll be able to make the 55K. In terms of like how many clients do I have to service per year to make that 668, it was about 222 clients. So my goal now is like, okay, I need to aim for that. I need to aim for 222 clients. So like in that service to have this type of fee. So that's like just really, really like important information that you should know when you're like looking at your numbers. And that's why I always say to our clients when they ask me a question like, well, what's the first thing I need to know? It's the first thing is understand your numbers, understand how much taxes you need to pay, understand like how your income works, understand like what type of expenses you're paying. And it's really important to look at some of these expenses. Some of these expenses, like I looked at and I'm like, well, I spent like a $7,000 on advertising. Did it really make me like that type of income? Did this advertising here actually help me increase this? Or was it from somewhere else? So they are the questions that I looked at when every couple months, I would also go back to this to check. And I actually looked at my actuals versus like my projections. So that leads me to the next thing. Like what you should be doing on a monthly or quarterly basis is actually forecast what you think your numbers are going to be for the next financial year. So let's just say in July, so now it's August, I would have already looked at how much I'm going to be making for the next 12 months. And I had a game plan where I was going to try to go to like double in size. So I needed 668. So now I'm forecasting about monthly income of 55,000. And I can guarantee you that I was wrong. There was no way I was going to actually make a monthly income from 55K. Because initially, from my income, I was only making per month about 27,000. 27,000 to 55,000 is like not that easy to do as an accountant. It was like really hard to kind of aim for. But at least if I put like a target there, I can at least work towards it and find out why I'm not getting to 55K. And I've realized over time, like I was only in July and August. I realized later on down the track that my first half of the financial year from July to December wasn't really that profitable. Like I wasn't really making high income like per month. And then from January to June, for some weird reason, January to June, my income would double. Sometimes it would go to like 55K, it would go to 66K, 70K. And the reason being is because I realized that when clients sign up, they sign up with me for the whole financial year from July to June. And by the time I reached January, I would have signed up like, say a new clients, 80 clients to 100 new clients. So I have like a recurring revenue that starts from July all the way to June. But in January to June, I get most of our clients on our recurring revenue. So our recurring revenue at the end of the financial year is a lot higher than the start of the financial year because over time I'm picking up more clients. And so I realized that it evens itself out. So my goal plan is to aim for like at the first few months, I'm not going to get that many, my income's not going to be that high, but I'm assuming January to June, it's going to be really high. So why is that really important? One thing is I was able to kind of determine that my income for the next 6 months is always going to be really high. So maybe I should just borrow the money that I'm making in the future that I forecasted that I was going to make, and then hire more employees. And so from then onwards, I was able to do this. So my growth in the next few years, and look, I'm happy to show you guys this stuff, but please note that the profit, the numbers, they are manipulated. So this is not exactly all my numbers. I've deleted a few things. I've changed a few things over. So, but like my numbers has increased significantly over time because of the fact that I realized that in 2019 that I was gonna make at least the same amount that I was making last year, because in 2018 I made this, and in 2019 I made this much, 60% growth. So why don't I spend most of that money in that I'm gonna assuming going to be making, as long as I taking into account for this, and hire a load of employees. So you would see in 2019 I finished the financial year, and then in July I decided that in 2020 July I decided I'm just gonna spend all my money on employees, and that's what I did. So I looked at it that my wages is going to be sorry, my income is going to be 334,000 guaranteed, because my clients are probably going to stay with me. So I went and said my budget for the next year is to spend for all my income that I made in the, like total income, and I'm going to spend it all on new employees. And so I did that. I went and spent like all my money on new employees, and I spent about 315,000 plus all the like software costs and all that gibberish like that. So that and I also paid for contractors. I basically spent my whole last year's turnover on like in the new year on just wages. And I made that call because I knew I was reading my numbers really well, and I knew that every year I was going to grow. So it wasn't risky for me to go and spend that money. However, you got to be sure that your clients are going to come back and pay you. So it just depends on your business. So when I was running my business, I was reading all my income, and everyone's income is very different. So you've got gym businesses here where you've got recurring revenue, but then you've got brokers, buyers agents, that their income they have to keep looking for every month. They don't have recurring revenue as much as we do. So I was lucky to be able to read my numbers and understand my numbers to realize that, okay, it's not that much of a risk for me to go and spend all my income that I know I'm going to be making for the next 12 months on wages. Because if I do that, most likely I'll have a lot more free time to go and look for more clients. I can spend more time on marketing and sales. And then I could also spend more time on building the business rather than working in it. And that's the reason why point one is to know your numbers. And I spent a lot of time talking about that, but the reason being is because knowing your numbers is probably one of the biggest habits that you should know. Let me go to the second tip, which is embracing the step growth. So each client, they have a very different type of growth trajectory. So I've seen some clients go like an exponential growth, where they go like they slowly go up, and then out of nowhere they just shoot up. Whereas I've seen also clients that go from like a step growth, where they plateau for a little bit, and then they go really high up, and then they plateau again, and they go really high up, and they plateau. So which one out of this do you think is really is a really better growth for your situation, for your business? I guess it really depends. But for me, I actually seen a lot of businesses that go go on this left side. A lot of them end up failing, and the reason why they fail is because they go like this, but then they go really sharp decline down. And the reason being is because when they grow really fast for the next 2 to 3 years, they don't have the processes set up. They don't have the right employees. They haven't paid their taxes. They reinvest all their money into growth, and they forget about all the things that they need to build in a business. It's very similar to like learning how to play a sport or a basketball and all that stuff. If you don't actually focus your time on learning the basics, then you will not be able to reach your potential. And the unfortunate thing is that a lot of business owners, they only care about like one thing and one thing only, which is growth. And they forget about like paying taxes, hiring employees, building processes, investing in software. And then as a result of that, they decline so fast, and they end up liquidating their company or the company goes bankrupt. So I just want to show you guys this graph because I think that the most important thing for you as a business owner is to understand that like growth is great. However, you shouldn't have a stepped growth type of mindset. So visualize like a growth that like you grow a certain amount and then you slow down and you focus on like fixing a lot of problems that you have from that growth. So in our business, when we grew, you'll notice in 2024, we slowed down our growth significantly. So our goal right there in 2023 when we grew, and you'll see the history of what's happened. In 2020 to 2022, we had immense growth. And the reason why we had immense growth was because there was a massive demand of accountants. There was a demand of accountants providing information, and a lot of accountants out there didn't provide really good information. So during COVID, when everyone's working from home, they realized that they don't need to go and see their accountant anymore. They can just find their accountant online. And as you know, most of you already know that I do a lot of marketing online, and so as a result, I grew so fast. And obviously, I got a lot of referrals. But the main thing is that during COVID, there was a massive demand for accountants, and so we grew. But then I realized during in 2023, when everything was drying up, I realized that I shouldn't focus on growth anymore. My services were going a bit down. The quality wasn't as good. It was because I built this business back in 2018, 2019 with a set of processes and systems that worked really well when I was a 5-man team. But when now we're a 30-man team or 30 people team, it wasn't working anymore. And one clear example was our phone system. Our phone system, I just had a mobile phone that had an office number, and the office number would redirect to that mobile phone. And I pass that mobile phone over to the admin team, and I said, okay, here's the office number. Now you take the calls moving forward. So that's what happened. But I didn't realize that at one point of time, I would have one employee making phone calls through the office number to the ATO, and then I'll have like 1 or 2 clients calling us at the same time. And I realized that there'll be a bottleneck. So clients were not happy. And I'm not sure if any of you guys were experienced this, but sometimes you would try to call the office number and it would just ring out or no one would return the call. And they just felt like no one was calling back. And we had bad service feedback as a result. And that was because I built a process that worked really well when it was a 5-man team, when we didn't really have that many clients. But over time, it started growing where we've got, thousands of clients now. And at one point in time, we need to call the ATO, we need to call clients, we need to pick up the phone, and we need to service our clients. And as a result, we need a better phone system that allowed our customers and clients to speak to each other. And therefore, we need to upgrade. And so that's why it's really important for you to visualize a step growth type of platform where it's about growth, but it's also about stabilizing and making sure that you can reach the next step. It's really important to try to reach the next step. And to do that is you need to sometimes spend a lot of money, and then you need to employ employees. You need to forget about picking up more clients. Or you might even just go, you know what, I need to increase my fees. I need to increase my fees because right now, like the services that I'm doing isn't really making me a profit. So when you increase the fees, you're going to lose some clients, and then you're going to fine tune your services, and over time, it's going to grow again. And I see it like, how when you do rock climbing and those rock climbers, they'll attach themselves to a latch up on the rocks. So even if they fall, they won't fall that fast and they won't kill themselves. They'll just fall down like, 1 or 2 meters, and they'll be able to get themselves back up again. So remember how analogy I said that to you guys at the start of the conversation. I said to me that I love to push myself to the limit and sometimes burn myself out. And the reason why I do that is because I like to reach my limit. I need to know where I can go to and how hard I can work. And it makes me feel good because I'm a hard worker. I enjoy working myself out. However, sometimes I do burn out. And as long as I've set these procedures in place to ensure that, ignore that thing there, but ensure that I don't burn myself out, I will fall back on this. So if I grow and if I sometimes fall back, I would just either only fall back down to here. And that's because like I've got processes in place, I've got like employees in place that would help support me if I burn out. Yeah. So that's the reason why I think and I've seen a lot of clients that they prefer to slow growth rather than exponential growth. And for example here, yeah, exponential growth here. And they just go really, really crazy. So I accidentally did this, but technically that's kind of like what happens when you grow too fast, that you can't really control your growth at all. And you go down real, real, real fast. And then they end up liquidating their company and they have to start off new from the start. And I've seen clients, they grow so fast, they they don't pay their taxes, they don't do their numbers, they don't even hire employees, and then they either just give up. They just go, you know what, this running a business is way too hard, so they just stop completely. So it's really important to like think about step growth. Think about like in 1 year you're gonna do some spring cleaning. You're gonna clean up your operations. You're gonna look at your softwares. You may even look at some of your staff, and then go, do I really need these people? It's unfortunate, but you need to make that call. And I'm just letting you know, like if you were going to make a employee redundant, you actually need to think about it and you need to spend the time to do it. You can't just overnight go, I'm going to make this person redundant, because if you do that, most likely you're going to make a mistake. That person's not going to be happy. You're going to ruin their lives. You're going to ruin your business life because they're going to sue you as well. So you need to actually give yourself the time to actually think about cleaning up the company and building processes in place. One last thing I want to mention to you is that a lot of business owners that grow their business, and I think a lot of you guys are like new business owners, been around for the last 2 to 3 years. You got to understand the first year in growth, you're either going to you're either going to grow real fast, and if you have any profits, you're going to reinvest it back into the business. So therefore, you're not really paying any taxes, or you're making a loss. It could be one or the other. You're either making a loss and you're not really growing that much, or you're growing real fast, but you're reinvesting back all the profits back into the business. So therefore, you're breaking even. You're not really paying much tax. In the second year, you could be then making the profit and from the money that you've reinvested back into the business, or you're still making a loss. But on the third year, because you made profit in the second year, and or your and then you report your tax return in your third year, because in the second year you've made a profit, but you don't lodge your tax return in your third year. What happens in your third year is that you pay double the amount of taxes, and a lot of people don't realize that in your third year of running a business is that you always pay 2 years worth of taxes. You pay your second year's profit taxes, and then you prepay your income taxes for the next year, which is your third year. The government has something called PAYG installments or PAYG taxes. What that happens is that when you lodge your second year tax return, you pay your tax return for in your third year, for your last second year. And then what happens is that because you've made a profit, the government goes, well, you made a profit, so we're going to make you prepay income taxes again. But in this case, for the current year that you're in, so you pay double the amount of taxes. And that's why a lot of businesses fail, because in the first year, they make a bit of profit, reinvest it, and then it grows exponentially. Second year, they make a lot of money. So they decide, oh, I will do the exact same. I'm going to reinvest everything back into the business. But they've already made the profits. They've already lodged their tax returns. They have to pay the taxes. And so they spent all their money on like expenses, equipment, or maybe even buying themselves a Lamborghini or whatever it is. They take all the money out. And then in the third year, they have to pay last year's taxes and the third year, the current year's taxes, and they just fall, and then they had to liquidate the company. It happens so many times. And I'm telling you this story is because I've just seen it so many times where a lot of people just don't lodge their tax returns, don't pay attention to their numbers. And so that's why the third tip that I want to tell you guys is focus on key simple numbers. The key simple numbers that I always want to focus on is, let me just bring up my profit and loss, is maintain 3 times total expenses, working capital. So what does that mean? Is basically 3 times the monthly income, monthly expenses. So say your monthly expenses is, say, 30 grand. I want you to make sure that you have in your bank account 90 grand sitting in the bank account for any time that you need. And the reason why I say that is because a lot of business owners, they fail because not because they're not good business owners. It's because they don't give themselves enough runway to run their business. Cafes are a very strong example of that. They spend 300K, 200K on fit out, and they only have $20,000 left over to actually run their business. So in the next 6 months, their cost of rent, their cost of employees, their cost of stock works out to be 20 grand or a month. So they actually only have like 20 grand in the bank. So their runway is actually only 1 month. So if they have one bad month, then they basically can lose their business. So from the very start of their business, they're always chasing their tail. They always have cash flow issues. So when I tell a lot of my clients, and I don't expect you to have it straight away, but the goal is to work out what your monthly expenses are, $30,000 for in this case, and then make sure that you have about 90K in the bank, just sitting there, either in the offset account or either in the savings account. So in this case here, it's very easy to work out. So if you look at my 2019 financial year, and you look at say my total income expenses, it's 19,000 plus 187. That's 200K roughly. So if I go $200,000, 200 divided by 12 times by 3, that's my monthly working capital that I need to keep. 3 times my monthly working capital, 50 grand in my bank, and I had it. And you can have it either in cash, you can have it in credit cards, loans, credit limit, whatever it is, but just make sure you have some sort of cash to rely on and give yourself some leeway. And as you know, like when you're running a business, like on a monthly, your monthly income isn't going to be zero, but at least it gives you 3 months of zero income leeway to run your business. So that's one tip for the one key number that you should focus on. Another key number that you should focus on for all the service-based businesses is that when you hire an employee, you should actually set a KPI for that employee. So when we hire our accountants, we hire an accountant for say $80,000. Our KPI for that accountant is 3 times their income. And you should set that. Either you talk to that person and you tell them that, or you set a mental note that this person that you hire needs to bring in or do $240,000 worth of income. And how do I explain this to the employee? I say to them, well, 1/3 of the income that you earn is going to be for your wages. The other third is for overheads. And overheads being, let's say, rent, software, marketing, and just overall general license, insurance, running the business. So I say to them, like, look, I've got all these expenses. I have let's say, in 2020, I had $531,000 of expenses. I also had some cost of sales, and that's a lot of expenses that I run. I have advertising of 60 grand, and so therefore my 1/3 of your the income that you make should go to overheads, and the other third should be profit. So when I run my business, in the end, when I hire an employee, the whole goal is to actually make a profit. What's the point of hiring an employee if they don't make you any money and you end up doing the work for them? And sometimes that's what happens. So that's why it's really important when you do hire someone that you actually think about the profit that you're making as well. You think about what their hourly rate is. Hourly rate. So for example, 52 weeks divided by 38 hours a week. This person is charging 40, it costs me $40 to pay for their wage plus super and all that stuff like that. So therefore, I actually need to bill at least $200 because I need to cover for write-offs, I need to cover for the overheads, and I need to cover for the profit. So don't forget there is write-offs as well, which is admin time as well. So some people might not work 40 hours on $200 charged to clients. So that's just something to think about when you know your numbers. It's really important to focus on like simple numbers. So simple numbers, and the simple numbers that I was talking about was times 3 monthly spending. KPIs on expenses, which is like e.g. staff. It could be also your equipment. So for example, if you were to buy if you're a taxi driver or a Uber driver, for example, you're going to buy a car. You want to know how much your car is going to make you. You might think you're going to be spending 60 grand to run the car, like in terms of like costs every year, like petrol and all that stuff, and you want to make sure that this times 3 or times 5 your income. Yeah, so that's just a very simple way of thinking about your numbers instead of just trying to always look at your P&L. Like looking at your P&L every day is just so confusing for people. So you should just work on like simple numbers, and that's why I'm kind of giving you guys some examples of simple numbers. Make sure that you have 3 times your monthly spending in your bank account. Make sure that you have like 3 times or 5 times your staff costs or equipment costs. And then you're always looking for some sort of return on investment. So if you decide that you're going to spend 80 grand on someone, you're hoping that you at least make 80 grand on top, and you cover for some of their expenses. Okay, another thing that you should also think about is rates or interest rates. So we have some mortgage brokers here, and they're very good at this. But like interest rates is really important. Like so, when I first started this business, I knew what, and it's so weird that I have to explain this to you, but some business owners, they get a loan thinking, oh, I just need money in my bank. I need $200,000 in my bank to run my business. So they went and go and get a unsecured loan for like 12%, 15%. And instead of like trying to save on the loan, they just got a loan like for $200,000 and whacked it into their bank account. And then they said, oh, this is cash that I need, which is 3 times my monthly spending, and it's just sitting in their bank account. So they're paying interest on 200K even though they're not using it, and they're paying 15% in interest. Whereas there are all these different types of credit that you can get in when you run a business. You can have the ATO. You can owe the ATO money as well. You can put your ATO taxes on a payment plan, and their interest rate you can check on an ongoing basis. It's like 11%. So you can just owe the ATO for 11%. And don't pay the taxes for the time being. I'm just giving you guys ways to think of finding better interest rates for your business and like opportunity costs. Sometimes people just go and get a loan for 15% and then they go and pay off their tax bill. Maybe that's not the best thing. Have they ever considered looking at their offset account? Your offset account is at 6% interest. Or your home loan is at 6% interest. Maybe it's better to get your home loan. Obviously, there's a bit of risk bringing in your own property, because then it's your own personal loan, and then as a result, if you do like close down the business, the loan stays with you. But yeah, your home loan is at 6%. And it's silly that I have to say this, but a lot of people don't actually think about the rate and the opportunity cost, and they just take a very bad loan, which is unsecured and at 15%, and sometimes they're not even using the money to make more money for them. So that's why I say like a really important thing for you is to look at the key number of like what the rate that you're getting for your savings or for your home loan. And one thing that a lot of people mess up is that they think that they just whack money into a savings account at 3%. It's actually better than whacking it in their home loan offset account, because the offset account is at 6%, whereas your savings is at 3%. So you can increase your interest by 3%, or you can reduce your interest payments by 6%. And a lot of people don't even do that. They just leave all their savings in a savings account rather than leave it in their offset account. So that are the things that you need to think about as a business owner. The last thing I did as well, the last thing out of these simple numbers, that a really strong tip is focus on specific numbers at specific times in your business. Okay, what does that mean? In my first year of running a business, I had one key goal. These 2 years, well, these first 4 years actually, one key goal and one goal only. It wasn't net profit. It was not net profit, because my net profit was like it varied so much. It was sometimes 33%, sometimes 39%, and went down to 17%. My key goal in the first 5 years of business is turnover. I only cared about growing my business. I only cared about how fast I can grow to $1 million. And then from 23 and 24 onwards, it wasn't about anything to do with turnover anymore. It was about processes and systems. It was actually nothing to do with numbers at all. So when you see in my business, like it's stabilized in the last 3 years. So 2024 to 2022, it actually stabilized. So I was making about like an average 15 to 16% growth. Okay, again, these numbers are manipulated. I'm just letting you guys know that this is not my real numbers. So I'm not trying to show off or anything like that. But in the last 3 years, it stabilized. And what do you think my key strategy was in the last 3 years? It was stabilize the business to make sure that my business can survive. It's not about like I've grown. It's not about growth anymore. It's not about turnover. It's about making sure that I have systems in place, processes in place. My team has been trained, and I have the correct amount of like risk for my business. So if something bad happens, I don't lose my whole business because I've spent 8 years growing this thing. I'm really happy with the numbers that I'm making. I'm paying myself a wage, I'm paying my wife a wage, and I'm also making profit that I'm really happy with. So why do I need to go and like burn myself out and double my growth anymore? It's not about growth anymore. It's not about turnover. It's about stabilizing, and it's got nothing to do with profit. So that's like non-number focus. But maybe in 25, 26, which is actually my growth, my game plan is to focus on net profit now. Okay, now I don't want 16%, 15% anymore. I want 20%. I want 20% growth. So how do I going to get 20% growth? And that's where you're focusing more growth on net profit, or they call it EBITDA, like earnings before interest, tax, depreciation, and amortization. So now like my stage in my life of my business is now, okay, I'm going to do some like cleaning up. I'm going to look at my marketing costs. I'm going to look at my software costs. I'm going to look at my contractors. Do I have any things that isn't really making me money that I should give up on? I should like slowly like iron out and clean up. Do I have wages that I should be cleaning up? You'll see that my wages start slowing down. It's not so maybe I've done some changes already. So they are the things that you need to focus on. Like you might even look at your income and you go, all right, well, I'm making income here, but is this service actually worth it anymore? I'm spending this much money on my I'm making this much money in income number two, but that employee that I'm paying for to make that, I'm paying them $300,000 a year. So technically I'm not making money. So I should maybe clean that up and focus my resources somewhere else. So that's how you're going to increase your net profit. So the reason why I'm mentioning that is like the whole point of running a business and growing a business is that sometimes you need to focus on key like you need to figure out what your number is and what you're trying to do, and then focus your energy on that rather than just focusing on always. And a lot of people think about this, they always care about net profit. They only just care about net profit. And if you keep focusing on net profit, you're going to lose your eyes on the prize, which is sometimes it's actually really important for you to focus your energy on growth because it's the first few years. If you focus all on net profit, what's going to happen is that you're not going to do what I did, which was reinvest all my money back into the business to grow it, like pay all my double my employee count, and then I wouldn't have focused on growth, and I wouldn't have increased my growth by 80%. And at that particular time during COVID, 2020 to 2021, it was a perfect time because there was such a high demand on accountants. And if I didn't hire the right amount of employees, even though some of them weren't doing any work, like at the start, I wouldn't have been able to increase my capacity to deal with the growth that we were going to have. And yes, I didn't make that much. Well, yes, I made a huge amount of profit that year, but my focus wasn't profit. My focus was turnover growth. So they are the things that you need to think about for focusing on your key simple numbers. Another tip that you need to do is think of the end in mind. So when I started my business, my goal is to build a business that maybe one day I could sell this business. It's very important for me to make sure that this business can survive without me if anything happens. And I tell all my employees this all the time, that one day maybe you would have to take over this business. And so that's why I built this business, and I'm always aiming for one day that this business will be taken over by the staff. I don't want to sell the business to like an outside person, like or outside business owner. I want to make sure that this business survives without me. And so my goal and my end in mind is always to grow this business, so it doesn't need me as much. And hence why you'll see that there's a lot of people working with the business, and there's a lot more names. And so if I have that end in mind, I know how to build my business. The first goal for me was to go for growth, because I'm here for long term. I'm not going to just sell this business straight away. I'm here for long term. So maybe the first 3 years, let's aim to get to $1 million. And I got there in the fourth, fifth year. And then the next aim was like, okay, let's stabilize the business. So I focused on stability. And then now my goal now is to focus on growth and net profit. Because if this business doesn't make a good amount of profit, then my team members will be like, well, I can't get the pay rises I want, my employees, or they won't buy into a business that only makes them 10% in profits, when they need to like borrow money to be able to buy in. So the net profit rate has to be higher, because if they were to borrow money to buy into this business, it may be considered high risk, because you could buy property and you don't even need to work in the business, and some properties are making like 5 to 10% growth every year easily. So they might just go, well, the opportunity cost is actually better to actually buy in a property and invest my money in a property rather than buying an accounting business. And so I kind of need to change that mindset. So that's why I'm focusing on net profit in the next few years. So that the reason why I'm saying this is you got to think with the end in mind, and that would help you determine what your goals are for your business. Like if you know that you're going to be here only for 2 to 3 years, then maybe you shouldn't be thinking about like your turnover, and you want to sell the business in 3 years. You should be thinking about net profit, because that's what people care about when you sell your business. So if you know what your end in mind is and your key goal, then you can make better decisions for your business, and that suits your business and your situation. Yeah. So I guess the last two habits that I have is like making sure, which relates to what I'm doing, or what I've done in the last 3 years, is make sure you implement effective systems in place. When I started this business, I actually thought about how easy it is for clients to pay me. So most old school accountants would have one way of paying, and that way of paying, of receiving money, is bank transfer, EFT, which is BSB account number, and you have to do it, go online and do a bank transfer. That's what most businesses do. Same goes to lawyers. So I was helping a lawyer start up his new business this last 2 weeks, and I said, "So how are you going to receive money?" And he said, "My office, like my old office, he just sends the invoice and it has the BSB and the account number." And I said, "Yeah, but let me ask you a question. Do you find it hard to make a payment? And do you find it very annoying to go and put in the BSB and account number every time you have to make a payment? And what normally happens when you do that?" And he said, "I normally don't. I'll push it to like next week, or when I'm free, or over the weekends to make the payment." I said, "Well, if you had a credit card payment solution, or if you had like direct debit, or BPay, or any other type of payment methods, would it make it more enticing for you to make the payment earlier?" And he said, "Yes, actually, like if it's a credit card, I can automatically put in my credit card details. If it's direct debit, knowing that my clients, once they sign the contract, it would automatically direct debit the money out of the bank account. That's actually even easier." So that's why I actually said, like, a good habit for a lot of business owners, and they don't think about this, is actually working out a way for your clients and customers to efficiently pay you. It's crazy how not many people do that. And a lot of old school businesses don't even think about it at all. And as a result, they even so bad that they don't even invoice their client for their job. I have a lawyer that did a power of attorney, and they did a contract as well as they did my parents' will a month ago, and I still have not seen the invoice. So I don't even know how to pay the guy, and I don't even know if I should even remind him to pay I owe him, $3,000. I should really message the guy. But yeah, that's beside the point. But basically, what the point is that this person is so bad that he doesn't even invoice me the fees, and as a result, he doesn't have the money in his bank account. He can't spend that money to hire more employees to do a better job with his invoice system, or he needs to just set up a software in place to help make those payments faster or invoicing system better. And that's like a crazy habit that a lot of people, a lot of old school business owners just don't even think about. And lawyers, accountants, engineers are the worst type of people when it comes to that. So as simple as it may seem, is sometimes you just need to think about what's an easier way for your clients to pay you, and maybe just spend the extra couple of hours setting that process up so that it makes it easier for clients to put in their credit card details or direct debit their payments through their bank account. A lot of accountants normally, if they have like $1 million in fees, they at least have 100K plus sitting in their accounts receivable that they haven't received the money yet. They've invoiced the client and the client hasn't paid them. And the reason why is because our clients, prepay us, and pay us on a monthly basis. We have a direct debit system where the money gets taken out of their bank account. And the why I set that up is because I want to focus on the service provided to our clients. And that's all I want to focus on. I don't want to hire one person in my office just calling clients and telling them to pay us. So from day one, I've set up a procedure where I have an engagement letter, I have a direct debit, and when a client complains, it's like, I'm used to you doing the work and then I'll pay you after. How do I know if your services are great? And then I say back to them, it's like, well, you have to trust me. If you don't trust me, then it's probably better that you go elsewhere. But I can guarantee, like, the reason why I get the money in place now is because I can hire the right employees, build the right software to run the business, have the time to actually focus on servicing you. And I know for a fact I'll do a good service for you. And that's why when clients complain or make any or ask me for questions, I usually respond really quick. And the reason why is because I actually have the money in my bank account to pay for the employees to actually focus on running my business. Whereas a lot of accountants, they don't make any profits. They only make enough profits to pay for their wages. Whereas I make the money, and then I know that I'm going to be making $334,000 in 2019. So therefore, I've hired as much employees as I could. So that's one thing that you need to think about. That's a very strong habit that a lot of people don't know. The last thing, which I've also mentioned, is aim to pay yourself, guys. Problem with business owners and a lot of accountants, they don't care about like paying themselves. When I started my business, I did the same thing. In 2018-19, my goal of 2018 and 19 wasn't really to pay myself. So I paid myself the bare minimum, $50,000. And I was on like, I gave up like $140,000 wage. And I decided I would just pay myself $50K because I could afford to live off $50K. And then I decided, I moved back home, by the way. I was living at home. I was working out of my brother's old bedroom, and that was my office. And I didn't really have much expenses. And then I also told my girlfriend at that time, which is now my wife, that she had to support me when we'll go out to dinner. So I spent about $50,000 a year maximum before taxes. And then in the second year, I decided I'll pay myself $80,000. And then after that, I started hiring employees. So as I mentioned, like the goal for you is you need to eventually pay yourself. So now fast forward to 2024, my wage right now is $190,000. Finally being able to pay myself a proper wage for me to support my living. And you might seem $190,000 is a lot of money, but when you think about like my wife, we're hoping to start a family one day. She'll probably have to quit her job. And as a result, there will be only one source of income. I kind of need that money to be able to pay for a mortgage and all that stuff. So that's why it's really important to pay yourself. And a lot of business owners, they don't pay themselves, and they just assume that they're making a profit. So let's ignore these wages here. Assume that these are all third-party wages. To be honest, like if you're making $68,000, you might be thinking that you're making a lot of money. But in this case here, this is just the market wage. This is not even market wage to pay you. So you've put in like, say 60 hours a week to work in your business, and you're only receiving a profit of $68,000 after taxes, that's only like 60K a year. You might as well better think about getting another job. But like I said, because I had the habit of looking at the end in mind, I knew that my focus isn't profit. I could survive without profit and wages. And then the next 4 years later, I know that I'll be making enough profit and wages to be able to pay myself a market salary and also make enough profit to survive off. So that's why it's really important to actually think about having a goal set in place to eventually pay yourself. But you don't need to do it straight away, but you need to understand that even though you're making a profit, for example, me when 2018, 19 and 20, this isn't a market wage. So technically my business isn't profitable. Even though it's showing 33%, 39%, 17% profit, this is not profitable because in here, my market wage is not right. Yeah, so that's the main thing that you need to do. You need to think about your market wage. You need to consider the high cost of living in Australia, and you need to prioritize your financial health personally. If you don't look after you and your family personally, you will not be able to look after your business. If you look after your business too much and you don't focus on your personal well-being and your personal health, that will mean that you'll cause problems within your family. And then as a result, what's the whole point of running a business in the first place? Most of you are starting a business because you want to start a family and you want to grow your family. And so it's very important for you to eventually pay yourself a market wage. Or then you have to consider maybe it's just better just to work for someone. And the last thing is 7, pay your taxes, guys. Minimize as much as you can, but make sure you pay your taxes. It's really important for you to pay your taxes because in Australia, it's very hard to live and it's very, the tax system's quite high. It's anywhere between 25 to 30% at least minimum that you're paying just to be in Australia. So it's very hard to avoid. There's just absolutely no way to avoid it. And if you just don't pay yourself at all and you pay no taxes and you make a loss, within 1 or 2 years, you're going to burn all your savings because in Australia, there's rent and rent is really high as well. So it's really important that you understand that you need to pay yourself wages and then also pay some sort of taxes and then leave some money for taxes. So that's the main key habits that I think you guys all should focus on. All right, thanks guys. I'll speak to you guys soon.